All right. Good afternoon, everybody. This is Gavin McGuire, event trader, and we are here for the latest edition of the Options Playbook, which of course means that we are being joined by none other than Brandon Mars, options trader himself, hitting some nice winners again today with that Netflix trade. So, Brandon, how are you doing today, bud?
I'm excellent. How about yourself, Gavin?
I can't complain. Getting ready for the holidays over there.
I'm trying, and yeah, like I told you before, I'm over at the sisters as part of the holidays. So if you hear a couple little monsters running around above me, my apologies. So I told them to stay out of the room I'm in, but they don't always listen that well.
Just slam a lot of stuff, right? That usually scares them. How old are they?
They are 1 and 3.
Oh yeah, you could just start slamming stuff. That'll scare them. They won't come by you. So we,
I,
we, we
I
should
don't
be
know.
safe.
That will probably rile them up even further,
It
actually,
might,
Gavin.
it might. They'll probably wonder what's going on and come in for the party, I guess, right? So that's some cute ages, though. So nice way to spend your holidays, that's for sure.
Yes,
Uh,
absolutely.
Another nice way to spend your holidays is obviously in upward trending markets. And with that in mind, I guess we'll kick off our conversation here with the current markets. And people always get to hear me blab on about them. But Brandon, I know we only get you once a week here. So, what is your current take on stocks overall, just looking at the broader indices?
Yeah, I mean, like you said, obviously a pretty strong little uptrend that we've seen here. I mean, maybe looking at a few things, a couple parabolic charts out there, got some things brushing up against those upper Bollinger Bands. So, maybe a little bit cautious with that, but overall, there's really not a whole lot of signs of selling. So, I think kind of leaning towards the call side still. And the funny thing is we still haven't even had the true seasonality of the Santa Claus rally and the January effect kick in. So, I guess in theory, if those things acted like they have in the past, we'd continue to see some strong momentum here. So yeah, I'm just trying to spend my time trying to find things that just aren't super parabolic, aren't way above their upper Bollinger Bands, and maybe looking for some potential, kind of catch up names out there to just kind of stick with the trend and stick with calls as opposed to trying to fade this market.
Now, when you talk about parabolic and the upper end of the Bollinger Bands here, what time frame are you generally looking at? Daily, weekly, monthly?
Daily and weekly are usually the two that I focus on, and then I usually check the monthlies towards the end or beginning of each month just to kind of see what it did overall. I mean, you could see it on the daily, but I kind of like to just see the final candle, if you will. So yeah, I'm usually looking at the daily in particular, and then every Sunday night when I do my research, I do a side by side of a daily and a weekly just to see what they both look like next to each other.
Now, when you do see things elevating above the Bollinger Bands, do you start searching around for puts? I know you usually like to lean on one side of the market, going with the current, which obviously is an upward trend here. Um, do you look at puts for that, or do you just kind of avoid it from the long side and don't worry about shorting?
Yeah, I mean, for me, I just tend to do a little better if I were to try to focus on a different call for that particular day as opposed to trying to buy a put. Again, just trying to stay on one side of the table. Maybe when we really reach that extreme level where I'm like, all right, we're going to pull back a percent or two here or there, then the puts might come into mind. But, again, just trying to maybe not bet against the momentum. So, if I see something really extended, I'll maybe just try to put that aside. And if you really find a nice trend like that, maybe it will intrigue me if we get some sort of flag pattern, or maybe just a little 3-day pullback, and it becomes a pullback long candidate. I personally just trade better if I were to jump in with a call in that scenario than to try to find a put opportunity on it.
All right, no, fair enough, fair enough. With regards to Santa Claus Rally, I guess technically it runs from Christmas Eve to T plus two and to the next year. Uh, this time we'll be kicking off on the 22nd, I suppose, with Christmas coming on a Friday. What's your trading philosophy over the week between Christmas and New Year's? How do you find options during that week? Is it a little illiquid that you try to avoid it, or do you find that you have a better opportunity because of that illiquidity and lower volume?
Yeah, I mean the illiquidity side of things would definitely add to some of those potential aggressive, moves up and down, which I think we all try to be cautious of when we get that, potentially low volume, volatility around a holiday. For me, luckily, most of the names that I'm trading are still going to have enough liquidity on the options front. There are certain stocks, I've talked about some of these before, my not so hidden, gems that I like to trade of the big stocks that are thinly traded, like a MasterCard or a Costco. Some of those might find some really low volumes just because they're low in general, that I might have to shy away from some of those. But, the typical names, the NVIDIAs, the Metas of the world, still usually have enough liquidity. And then, yeah, I mean, like any trader, I guess, try to take advantage of any sort of, low volume holiday move that we can find out there.
All right. That with that in mind, a few of the names that you mentioned are a few of the names we're going to be talking about here. So, probably a good time to check out those charts as we start getting closer to that Santa Claus rally time frame. But first, let's talk about trades that you have on the table right now. And the only one out there that you currently are still in would be Walmart, WMT. Now, this definitely doesn't fit the normal chart that we've been seeing here. Most of them, like you said, been running parabolic towards the upper end of the Bollinger Bands. This one certainly a little different. It's been straddling its 200-day moving average here, trading in a sideways direction ever since getting pinched right around mid-November there. So what was it in Walmart that you're seeing? Because obviously this is pretty divergent from the other charts that we've seen out there.
Yeah, I mean, just like you said, it's definitely not looking like most of the charts, and that was kind of what intrigued me. I mean, just because it looks different definitely doesn't mean it's a good one. That's for sure, because any stock that goes down can just keep going down. But what caught my attention was a potential catch-up name. Retailers around this time of year, not always the worst bet to have out there if you're taking a shot at something. And then there were just a couple of technical things that caught my attention. One, it had a bullish MACD cross. The histogram moved above zero. Like you said before, it was kind of straddling around that 200-day, the 155 area. Also had a 5 and 10-day simple moving average cross. Which I've talked about this briefly, but if you find a trend where the 5 crosses above the 10 or crosses below the 10, you can usually ride that trend until it then reverses. So that's kind of one of the first tricks that I learned from my old market maker friend of looking for that particular cross. So it's always something that catches my attention. So had it on the radar for today, and then it just kind of started to actually set up intraday ascending triangle. So just started to coil, had the ascending triangle right around that 155/200 level. And that's when I decided to jump in, and it's slowly starting to break above 155. I would maybe like to see it get a little bit more, I don't know, enthusiasm or excitement to this breakout here. I'd like to see some volume coming in here sooner rather than later. But again, with a intraday ascending triangle, it should have a price target of about a point. So looking for hopefully move up to around the 156 level, and it would probably exit. Maybe would consider rolling if I wanted to carry something overnight, but that's kind of what I'm looking for at the moment.
Well, it's pretty tough to find any volume and excitement right now, right? Unless you get it early on in the day. It certainly feels we're getting into that holiday trading style pretty early at the moment where it just kind of flat lines, go sideways, or in your scenario here, the perfect ascending triangle. So um, we'll keep an eye out, see what you do on that. But it sounds to me your more likely scenario is for you to bank it and then not worry about rolling. Would
Yeah,
that be a proper assumption?
I think so. I mean, people might think I'm a little crazy for this particular statement just because of what the market's been doing, and I probably wouldn't argue that. But maybe carrying risk overnight is, I don't know. I'm maybe hesitating a little bit more and more to do so. Again, the markets are strong; they just keep going up. But I feel like one of these days we're gonna have maybe a little bit of a gap down on some profit taking, and I don't know. It gets a little frustrating if all of a sudden you're in this such a strong market and you carry something overnight and it doesn't work out for you. So we'll sit and watch it. And again, with Walmart, it's just a trade. Again, it's not the strongest chart out there. I do think after the move down, it's probably got a little bit more upside as it moves its way above the moving averages and everything. But it's not one that's like totally screaming out to me like this thing's just gonna keep charging higher. And it's also a blue chip. So sometimes the gap up or gap down scenarios on those aren't quite as strong as you would find on a big tech stock. So just might not be worth the additional risk overnight.
All right. Let's talk about some recent trades. Well, one's a recent trade. Others are names that you've traded a lot, but you had it on your radar. But Netflix, really nice little pop today for you. This probably fall more in that euphoric timetable, I guess, when you're looking at it. It's up at the top end of that Bollinger Band. Nice push above the 20-day moving average after that slip below to start the month off. So what was it in Netflix that was jumping out to you?
So that one, if you're taking a look at yesterday's candle on the daily, it does have an upper wick, which you don't always love to see in this environment. I mean, it's nothing to, stop the presses and, short right away kind of thing. But anytime you're seeing an upper wick these days, it's almost a sign of weakness because there's been so few of them out there on some of these names. But pretty nice looking candle yesterday above the 480 level, and it has a fib level around 493 and a half. And just with the momentum in the market and closing above that 480 level, it just, again, we talked about this a few times, you kind of start to get magnets when you get close to those levels. Prices just get drawn in. So thought it would at least make a couple point move up to that level. And, it just kind of started coiling and consolidating today. Market remained strong and just seemed like it would at least move up to that fib level. Got just short of it and looked like it was stalling a little bit, which it did. And it pulled back just a little bit. So ended up getting out, locking in some profits because it was up like 40%. And again, just looked like it was going to come back in a little bit. And then actually just like 10, 15 minutes ago, made another nice move up to like the 494 area, 495. Looks like it kind of wants to stall again. And yeah, like you said, I mean, brushing up against that upper Bollinger Band, big psychological level around 500. I mean, I wouldn't be totally shocked if we see that happen over the next few days or into next week. So probably worth watching. But, again, like most names, maybe getting to a little bit of the euphoria stage.
Yeah, it's tough finding something that isn't euphoric these days, right?
It
Um,
really is.
Speaking of, let's take a look at a few other names that you got on. Tesla riding above the upper end of its Bollinger Band. Not as much of a parabolic run here in Tesla. It had that sideways trading pattern going on between 230 to 250 over the last month and then just slowly edged higher. But you had it on your radar. Now you've traded this a lot in the past. I don't believe you fired on it after putting it on your radar. But what is it that you are looking at? What is it that kind of kept you out from moving in on the trade, and what could get you involved towards the back half of the week?
Yeah, I mean, just like you said, that sideways consolidation is really what intrigued me. I mean, anytime a
Very
stock,
similar to Walmart, I suppose, right?
yeah, and
And even better looking consolidation than Walmart too, I guess. So
yeah, and I mean, especially for a name like Tesla, I didn't go back and do a scientific back test on this, but a month-long consolidation for Tesla is a pretty long time. So anytime any stock consolidates for a month, in theory, the move higher or lower, whichever way it breaks, is usually going to be pretty strong. So it, got that breakout, and you would think in theory with what the market's doing and breaking out of that consolidation that it would have some room to run. Yeah, another name, like you said, brushing up against that upper Bollinger Band. I mean, I wouldn't even mind seeing it come back into, maybe like the 250 level to, maybe do a little retest of that consolidation area, maybe come back in towards like the 5-day around 250.5. So kind of similar level to try to jump on it. Again, I personally don't like chasing stocks, and I miss things because they keep running sometimes, and I'm fine with that. It's just my style. Once things start reaching that upper Bollinger Band, you're going to have some algos and stuff, and you're going to have some profit taking. So I always just hesitate a little bit on the options front. But yeah, I'd love to see this just kind of come back in a little bit and, jump on some calls for, maybe the end of the week into next week too. But I would say keep this one. I mean, you got to imagine the 260 level is going to be pretty achievable here sooner rather than later. Gavin, did I lose you?
you didn't lose me, just user error on the mute button there. So, but no, next up, we've got Coinbase, and this is the very definition of parabolic. This thing's doubled since October 30, which is, of course, once the entire market started rolling out. I'm assuming this breakout period, or this little breakout here, is what caught your attention on that.
Yeah, so I was actually looking at this one. I put it in my notes yesterday morning, and I tried to put a little asterisk beside it of, names like this in this market environment definitely have some momentum. So you take it with a little bit of a grain of salt. But what caught my attention was it had an evening star pattern on the daily chart. So basically, what that is that starts with the candle on the 13th. You get that big green candle, really no wick at the top. And then you got a little bit of a gap up, picture kind of like a star. That's where it gets its name, above the candle. And then the next day you get a long red candle. Again, in this market environment, you have to take these things with a grain of salt. But a evening star pattern is considered a very reliable reversal pattern. So,
What's the
yeah,
general theory behind the money that's moving behind an evening star pattern?
what is the general as
Well,
far as,
yeah. If you see an evening star pattern, is your read on that? You're talking about a reversal that's leading to some profit taking and sellers coming back in, or what?
yeah,
When you, yeah,
some profit taking and really kind of a topping pattern for a move higher. And I mean, coin would really fit that bill, right? You've got the parabolic chart, and then you've got a reliable bearish technical pattern up at the top of the move higher. So, if you're looking to try to short something, that's really something you'd look for. But I mean, again, in this market environment, sometimes these things get thrown out the window. But it is, I think, important to know. And again, I kind of threw this idea out. I'm not looking at my put list a whole lot these days, but I know people are kind of looking for put ideas. So I usually try to throw one out there if I see something. And with a pattern like this, I think it's important to note that it's out there and it exists. And sometimes when these patterns do hit, you might get another day or two before they start to kick in. And if you're looking at it today, I mean, we've still got 2 hours of trading left. So again, we need to take this with a grain of salt, but that's forming a pretty long upper wick at the moment. And if that continues to drift lower into the close, that would create a shooting star candle. Again, a lot of time could change this. But then all of a sudden, you've got a very reliable evening star pattern into, basically a day later, another reversal candle. So, again, you got to be careful shorting a name like this. But eventually, when you get enough of those technical patterns adding up, they usually start to kick in. And I would think that this name would just be due for some profit taking in general because of the parabolic status.
What would be the closing price that would put this on your radar for puts? And I'm assuming for you, again, as you like to kind of lean in one direction and concentrate and swim with the current, um, it's got to be something that's a perfect setup for you to be enticed by a put at this juncture.
It really does. In this case, I'd probably keep an eye on that 155 level. Again, 155 would kind of be like a psychological number in a way. And it was also basically the high of the evening star pattern and also the high of yesterday. So if it were unable to hold that level, then you start to have some fresh longs and stuff that are in this trade now that will start to go underwater. And if it can't hold that, you would think at that point it would at least make a test down to the 150 level. Again, another pretty big psychological level. And, I'm not necessarily saying going and betting the farm short on it, but if stock like Coinbase moves from a 155 to a 150, over a day or two, that can create a nice put opportunity.
All right. And just kind of watching this because obviously this would fall into that high beta that we've been talking about, people really chasing. And I'm just noting that because I did just get a price alert MongoDB, MDB, coming in here and testing its 20-day. And MongoDB is kind of one of my risk on watches, which is why I always have it on here just for those high beta tech names. It always seems to be at the forefront of the declines and everything. So let's keep an eye out on that just to see if we do start seeing a little bit more profit taking, like Brandon was talking about with Coin and a few of the other names. Just watching the Nasdaq here as we're talking, Brandon, back down below 17,000. So that continues to they continue to search for buyers up there. All right. Speaking of the Nasdaq, two names left on your radar that you trade frequently: Meta, META, of course, Meta Platforms. This has really been pretty strong, and again, another sideways trading pattern here, Brandon, that you've been liking, and now making that breakout move. So, what put it on your radar, and what kind of prevented you from taking it?
Yeah, that one's a little bit of a thorn in my side after
Yeah,
this
I don't mean to rub
2-day
it in. I know
move.
I'm not asking because why didn't I take it? Because I didn't have the money to, asshole. But sometimes you can't take them all, right? But what was your thought process on this Meta platforms?
Yeah, I mean, again, just the name that I was looking for, that wasn't way up around the Bollinger Band. And, big tech, you would think in theory after the, felt like massive sell off of, a couple percent in this market. But, the big tech's been lagging a little bit. And it was just kind of sitting there floating around its 20-day, getting close to that 340 area. And it just felt like if big tech came, I don't want to say back in the strength per se, because went down 3 or 4% here or there. So nothing to stop the presses about. But it just felt like that was a name that was probably a likely candidate to continue its strength. I didn't end up taking that one, unfortunately, because frankly, after a big week last week, that included a very, very large options expiration. I just didn't want to jump into anything real quick on a Monday morning and, potentially have a quick fade or anything like that and get my week off to, a negative start. So I didn't touch anything. And then, of course, last night when, I had my glass of Pinot Noir and I was doing my analysis, I said, damn, that meta made a really nice move yesterday. Um, so yeah, here we are. Yeah, I mean, again, now all of a sudden that's brushing up against its upper Bollinger Bands and playing with another key psychological level around 350. So I would think maybe needs a little bit of a breather, come back down and test that 350 level. Maybe see a little bit of profit taking, but I got to imagine that this is going to be a pretty strong candidate through the end of the year.
Certainly looks that way. Another name that you had on your radar, and we got a nice little segue here thanks to Fib Trader. Fib Trader just posted he is selling the remainder of his NVDX, which is the 2-time long NVIDIA ETF. NVIDIA was another name that you had on your radar. So he's talking about NVIDIA reversing back below Fibonacci support at this 493 or 493.55 area. So what was it you saw NVIDIA, Brandon, and what was it that kept you from the trade, which right now is saving you money? So what you didn't make in Meta, you're not losing in NVIDIA, right?
So, um, yeah, pretty similar story, I think, with Meta. It's been one of the stronger big tech stocks. They took a little bit of a breather, and then all of a sudden, you've got that 500 level in sight. And again, it just seemed as though if strength in big tech returns, that Nvidia would test that level, and sure enough, it did yesterday. And just the exact same story. Didn't want to touch anything on a Monday morning right away, and it just kind of took off and went over that 500 level. Came back in. I mean, it's of all things that are fading today. That's one. I mean, I don't know. It's Nvidia going into the end of the year with the run that it's had. Maybe a little bit of profit taking here, but I would be kind of surprised. Again, if the market melts down, then I'll take this back. But you got to imagine that 500 level is going to be pretty much in its sights through the end of the year. You'd have to think.
All right, so we'll keep that level out there. Hey, one other I just want to throw at you, Brandon. I know it's pretty popular with the retail crowd, and I know you traded a lot, and it's had a pretty nice move. Amazon. You got any thoughts on Amazon here? I'm assuming that you've probably been peeking at it.
Yeah, again, that's another one. I really liked that one coming out of that consolidation around 147. So, I mean, that's a pretty long consolidation that this one had too. Just about a month's time, similar to Tesla. Made that real nice move. And again, we're the whole candle today is up above its upper Bollinger Band. So, just for me, I would imagine that we would see some sort of profit taking. And I mean, I guess not a huge divergence, but it's down in the red today while the market's up. So I guess we're seeing that a little bit. Again, I think coming out of that consolidation, if it maybe comes back and checks in and tests that 150 level, you'd have to imagine it see some pretty good support there, and would probably create a pretty good opportunity. But I mean, most of these names, unless the market's really melting down, if you saw some of these going down 1-2% in the day, they'd probably be short squeeze candidates going into the end of the day. So, again, just another reason that I kind of want to just stick to calls, because it just kind of makes trading a little bit easier in that regard.
Right. No, I hear you. All right, so that does it with the trading portion of this. Some of the names take a look that we're going to take a look at. Now we're going to come into another strategy you got, and this is for the people that maybe spent a little too much around the holidays and they're looking for a cheaper way of getting in on a covered call here. So why don't we start breaking in and talk a little bit about that, Brandon? What exactly do you see as the poor man's covered call?
Yeah, like I told you before we hopped on, I figured I'd do some sort of Christmas holiday theme, and I was thinking January effect or Santa Claus rally. I found something that was new to me, even the Christmas tree option strategy, which involves like buying 6 options at once. And I was like, you know what? Let's not hurt our brains here as we head into the holidays. So, um, yes. Anyway, a poor man's covered call. So basically, all this is when you buy an in the money call option with a longer term expiration. So think like 6 months out, for example. And at the same time, you sell an out of the money call option with a shorter dated expiration. So, for example, maybe think a 1 month time frame. And the difference here with the traditional covered call is a traditional covered call uses ownership of a stock to cover the risk that's involved with writing a call option. And this strategy uses a long term call option instead. And buying an option involves less capital than stock ownership, and hence the name, the poor man's covered call. So this is, again, sticking with the bullish theme. Yeah, so this is a strategy to use if you are, I'd say, probably neutral to bullish, and you want to conserve your capital, and you also want to generate some income.
All right. So, if you're looking at that, then how's this different from a typical covered call then?
Yeah, so I mean, really, the main difference is just the using stock ownership. So again, if you're doing a regular covered call, you would actually own, call it 100 shares of a particular stock, and in this case, you're just going to use a call to replicate ownership of those shares. Um,
The the one thing I was gonna ask you on that is, I mean, I can understand the share ownership on a regular covered call. I guess there's a little bit more math to do if you're looking at the price of a call option that's 6 months out versus the price of a call option that's 1 month out. So, do you suggest, like, just making sure you got yourself covered using a calculator? 'Cause, from my understanding, is this a naked put that you have out there then, or a naked call that you have on the, short end then?
Yeah, I mean, I guess technically speaking, you would naked in that regard. I mean, you do have the other call option that's there as some form of protection, but again, that's going to be a longer dated expiration, so the risk wouldn't line up to the same date. So yes, you are absolutely correct in that regard.
So this would be a little bit riskier if you had a stock, let's just, for argument's sake, talk, it's December 2018, and you're looking to do a covered call, and Riot or whatever company that month decided to throw Bitcoin in their name, right? And then everything just started going parabolic. That would be pretty risky on something like that, I assume, right?
Yeah, I mean, especially a name like that where you could get something that would soar. Yes, absolutely. And yeah, there'd be a little bit more risk there in not having the shares in your account. But you're kind of going back to what you're saying with the calculator. Your cost for the long call and what you're going to receive in premium will be very defined because again, you'll see the bid ask. So you're going to have to pay, you're going to have a debit out of your account for the long call. So you'll know exactly how much that is. And then you would know how much premium you would receive from writing the call. Where kind of your risk would come in, like you were talking about, would be really a large move in either direction. So this is where some of the calculation stuff comes into play. So if a stock soared, your short call would move against you. And in that particular case, that's where you would need to adjust your call because it moved against you, which would, cost you cost you money to adjust it because it went against you, um, in order to cover yourself to eliminate some of that risk that you just mentioned. And on the flip side, if it tanked, if the stock tanked, your long call would move against you. So, really, this is a type of scenario and a type of strategy where you kind of want the stock to slowly climb. So you're kind of like short and long term bullish. I'd say maybe longer term very bullish and shorter term slightly less bullish, because really what you want to happen here in an ideal scenario is you want the stock to slowly climb, which makes your long call that's longer dated slowly appreciate. And in the ideal world, your call that you wrote would expire worthless. And then that way, the theory behind this particular strategy is you hold on to the long call, and then you just keep rewriting the shorter one to collect income.
Okay, that makes sense. Is there a certain type of stock that fits this style better? We talked about the Riot thing, so obviously high beta names. It sounds like that might be something just because of the volatility you would look to avoid. But I mean, is this something better for in like something stodgy like an IBM or something like that?
I would think so. That would kind of be my opinion on that one. I'm sure there's some research out there that maybe says some otherwise, but yeah, I guess again, in theory, if you were to do this on like a NVIDIA, and again, this is one of the risk of when you're kind of in a way hedging yourself when you're buying and writing options at the same time. If something soared, that's going to end up hurting you, and that's going to hurt the trade. And you would have been better off just buying a straight call option. So, yeah, maybe something that's a little bit more of a slow and steady that, well, Walmart's probably a perfect example. A slow and steady blue chip that might move 1 or 2% in a week or couple weeks, whatever's happening with that at the time. But that would give you the opportunity to be longer term bullish on a Walmart, but you'd get that slow and steady climb that would allow some of those options to expire worthless, which again is what you want in this case.
All right. Real quick too, just get an alert. Name that I called out earlier, GXO, continues to move higher here. That is one of those shipping logistics software companies that we were talking about. So that is, I just got on the monthly here. That monthly chart's starting to look pretty good for a possible breakout above that 67 level. Definitely a nice run in GXO. So if you're, let's just take Walmart for an example. If you're, and I know you don't have all the options pricing in there at the ready for you, but and this certainly seems like a strategy where you'd want to think it out a little bit, kind of do some calculations, right, Brandon? Make sure to do your homework so you truly understand your risk. But if you were looking at Walmart, is there any particular areas that you'd be looking at if you were to take this?
Yeah, and just real quick before I answer that, GXO, for what this is worth, this is pretty thinly traded on the options front, like 21 puts today, for example, of how thinly traded. But it's got a chunk that came in. It's got like 3.3 times normal call volume today. Looks like there was a big buyer of the January 65 call strike. So again,
Okay.
pretty thinly traded, but anytime I see something like that, I always like to throw it out there at least.
It's looking like a good trade right now. In Brandon Mars's world, I assume that he'd be trimming a little bit here, maybe rolling it up.
Well, I mean, if we're at that's actually one that you'd kind of run into you'd have some thinking to do on this one. I mean, you got thinking to do on every options trade, so that was a dumb comment. But the reason I say that is, this case in particular, the nearest option chain it's only got monthlies on it. So it's January. You've got the 65 strike price. which has a 25-cent spread, which isn't huge, but that can add up if you're trading, 10, 20, 30 contracts at a time. And all the volume's concentrated on the 65 strike. There's been no options traded on the 67.5. There's only one contract on the open interest. So this is a particular case. If I were in a trade like this, I'd probably end up letting the 65s ride unless some sort of volume picked up.
Just from a liquidity perspective, I assume.
Yep, just from a liquidity perspective.
Okay. All right. So
Um,
going back to Walmart then, Brandon, like if just basic, levels that you kind of look at if you were involved here. So I mean, for the long dated, that would obviously you said be in the money calls. So I would assume that you'd be looking at something in that 154 area.
yeah, if you're looking out, again, we'll call it 6 months, give or take. So we'll look at June. Um, if you're looking at the contracts here, you got increments of 5 points when you're looking that far out. So you'd have to be looking at, 150, 155, unless you went deeper into the money. So in this particular case, I always like to save money on premiums. So I'd probably go right at the money and, look at the 155. And then you could, look anywhere from if you're looking shorter dated, you'd probably be looking in like the 160 range. Again, if we look at this particular stock, we've got the 50-day that's at 159. You would think that would act as some resistance. Also, you've got the gap down from earnings on November 16th, which is in the 159 range. So for me, again, I'm a nerdy chart watcher. I'm going to look for areas where I can protect myself in this particular case. And in theory, I would say after the fact that Walmart's moved down, you've got a couple levels of resistance from the earnings gap down around 159, and then you've got the 50-day at 159, and that's gonna the 50-day is gonna move. The gap will remain the same, but the 50-day is gonna move with price and time. But you've got a couple layers of resistance there that are gonna keep it from the 160 level in theory. Yeah, I mean, again, we could have it announced next week that all of a sudden everybody under the sun, went into a Walmart on December 23rd and they cleaned out all the shelves and their revenue has soared. Again, a risk with any investment. But in this case, when you're trying to get the option to expire worthless, in theory, you would think it would probably go up and test that 159 level, which would help your longer term option appreciate. And you'd have some sort of resistance in place to potentially stop the stock to let like a 160 call expire worthless. And then you go and you look at the charts and maybe you don't even like the strategy anymore. Don't write another call if that's the case. Or if you think it's going to break out to 160 or maybe sit there and consolidate, then maybe you start looking at the 165 level to, rewrite that contract. But that's kind of how I would approach that if I were to enter into it today.
All right. Let's see, Brandon. Anything else on this covered on the poor man's covered call? Then, any other pieces of information that people should be aware of before they try this strategy?
Yeah, just the last thing that I want to mention is you are intentionally buying in the call money as part of this. So your theory there is that the stock is going to go up, and your option is going to remain in the money as the stock appreciates. So as you get further and further into the money, you're most likely going to be assigned if you do not close it out at expiration. And I would just kind of keep in mind, like, let's just say you did this with a NVDA. If NVIDIA went from 500 to 600, which doesn't seem all that unreasonable, and you were to hold this over a 6-month period, well, your stocks moved 100 points. Yeah, you're talking an extra $10,000 in capital that would be required to buy that stock if you were assigned. So, again, you only want to be assigned the stock if you actually want to take ownership of it after implementing the strategy, where you could just close it out before expiration. That's very easy to do. But again, if you ended up finding a stock that ended up being a home run over a 6-month period, you might need a lot more capital to take assignment of that stock when the time comes.
All right. Anything else on the poor man's covered call that we need to know, Brandon?
No, I think that's about it. I will just, since I'm here on audio, Walmart here real quick. At about the 155.5 level, options. Let's see here. We've moved from about 97 cents up to about a buck 20. So getting a little, not a huge amount of appreciation. I mean, kind of what happens on some of these blue chips, but starting to maybe approach that price target that I have. So, might start
Okay.
thinking about just taking a little bit of profit here soon.
And 156 was the round number that you had thrown out, right?
Yeah, and part of the reason of that is one, Walmart just seems to move in point increments because it's the stodgy old blue chip, and
Right.
the ascending triangle front that it had earlier today would give it just about a price target of 156, just based on technical rules.
All right. Sounds perfect. All right, Brandon. I think that's gonna do it for the options playbook for 2023. We're not going to be around next Tuesday. I mean, we'll be on the desks trading and keeping an eye out on the markets. Probably nothing too aggressive, but there's no audio next week, so this is going to be our last segment for the year. So definitely thanks for bringing all these great ideas and great trades to the subs. I know I see the feedback, and you definitely get a lot of positive mentions out there. So, and these different strategies that you've been presenting. I'd be curious if people could write in if they've been playing around with any of really kind of resonated with them. But definitely thanks very much for everything on that you've been offering up here, Brandon.
Yeah, no, thank you as well, Gavin. Yeah, I very much enjoyed doing this segment with you, and yeah, we'll fire this back up in 2024. So, yeah, like you said, as far as people writing in feedback, yeah, I'd love to hear if anybody did any further research and used any of these. Again, some of these aren't going to be for you, and some people might love one and hate another, and that's kind of the options world. And if people are writing in and there's any topics that they want to hear about, I'm all for ideas for 2024. So I'll probably be trying to brainstorm a little bit over the next couple of weeks. But if anybody has any thoughts, love to hear them for sure.
All right, you heard it there. So please send it in if you got anything for us on that front. But hey, Brandon, you take care of yourself and you have a great holiday season, and we'll talk to you soon.
All right. Thanks, Gavin. Enjoy your holidays as well. And hope everybody out there enjoys their holidays also.
All right, thanks, Brandon. We're going to shut down streaming here then momentarily. We'll be back up, and I'll be posting the recording of this episode of the Options Playbook shortly.